Gautam Trivedi is with us. He's co-founder and managing partner, Nepean Capital. Gautam, good to have you with us here. Good morning. Thanks very much.
Good morning, Prashant. How are you?
Why don't we kick off with just a comment on names like IRFC and some of the others in that space, which are now, as we were discussing earlier, more valuable than some of the nifty companies. What's the thought process here?
Yeah, I think the fact is that at this point, a lot of these NBFCs, including IRFC, I think have started to look attractive. They haven't really done that much. I mean, the entire BFSI space really has been a laggard over the last 12 months. So I think I don't have a view specifically on IRFC, but I think that's the view on the NBFC and the BFSI space.
Interesting, because we were saying maybe it's done a little too much, especially IRFC with almost a 2 lakh crore market cap tag now. But I think your comment is broadly on the NBFC space, right?
That's right.
Okay. How are markets looking, Gautam, themselves? Again, I mean, we had a 2-week break and then right back, 400, 450 points in 2 sessions on the Nifty. How are we looking near term?
I think near term is still very strong. The fund flow from domestic retail investors who are obviously a lot of them are first-time investors, has been just unabated. You saw December taking in over 17,000 crores in SIPs alone. So I think that momentum from domestic investors is not going to slow down. I don't see any real cause that will make it slow down. And if you then look at the impact it's having on our weightage in the MSCI Emerging Market Index, so we've gone over the last 8 years from 7% to over 17% now. And as a result, if you notice until I'd say about the last quarter of calendar 23, the FPI flows actually weren't really doing much. But as our weight in the MSCI started going up, the ETFs and passive funds have to match that. So as a result, it becomes, in some sense, a self-fulfilling prophecy where money's attracting money. And until we don't see a significant slowdown in domestic flows, and between now and the elections, unless something, a major calamity happens overseas, I don't see that slowing down. So I think the momentum should continue. And FIs will be domestic flows.
All right, the momentum should continue. There are some stocks that are bucking the trend this morning, actually. Aster DM is up 10%, so don't lose sight of that. We were talking about it earlier on the show as well. Volumes are picking up on Aster DM. Yes Bank is coming back, up almost 4% over there. And a couple of these stocks, Polycab, by the way, look at the pullback in Polycab, up 3% now. In fact, I think the low that Polycab saw was somewhere around 3,900 or 3,800, if I'm not wrong. If you just pull up a 1-month chart, around 4,000 or so, and now it's back to 4,300. So there's some amount of pullback that we're seeing in Polycab. Controversy or no controversy, this is a stock that has always been a favorite. Gautam, hi. Thank you for joining us. I wanted your thoughts on the mid-cap space, actually. Currently, the Nifty PE is about 20 times forward, but the mid-cap PE, the Nifty mid-cap PE is about 28 times. So given the kind of valuation discomfort that there is in mid-caps, do you think that one should be a bit cautious? And even if you're taking profits out, it's better to do it now in the mid-caps rather than the large caps?
I agree. I think the fact is the mid-cap, and even we aren't even discussing small caps. I'm sure that PE is even worse, or even higher. But the fact is that I think it's time to probably be a little more careful on incrementally putting new money in small and mid caps because they've rallied so much. In fact, we ran a screen only last week, and this is about almost 1,150 stocks. And we found 784 stocks have gone up 50% or more since their own respective 52-week lows. So that's been the kind of mania that we've seen in mid and small caps. And again, this is across market caps, but mid and small caps in particular. And if you look at the large caps, Sonia, I think your point's very valid. If you look at the large caps, and if you look at some of the stocks that haven't really moved, and you're looking at Reliance, you're looking at a whole bunch of companies, TCS, Infosys, HDFC Bank, etc. They collectively account for almost 50% of the Nifty 50. And their average return in 2023, a calendar year, was a mere 9.5%. So is now a good time to actually think of putting money and playing safe with large caps? The answer is yes.
Hi, Gautam. Good morning. Nigel on this side. Gautam, last year when we briefly chatted, I think in the last quarter, you were telling us that Infosys is not looking so bad at those valuations. It was an underperformer. But clearly these results, the street has got fairly excited on IT. How are you all positioned on the tech space? And would you all play large cap IT or mid cap IT? Because if IT seems to be turning around, we're going to be getting rate cuts and maybe things are not as bad, then the higher delta may come in from the mid cap space. Tell us your view.
Yeah, so I think now is a good time to get back into IT if you've not been in it. So you haven't really missed anything significant over the past about 18 months or so. And if you look at even the post-results sell-side research that's been coming out on the four big ones that have announced so far, i.e. TCS, Infosys, HCL, and Wipro, a lot of these companies are now trading at, so Infosys, for example, a note that I saw for FY26 is now 18 times. TCS is still very expensive with respect versus Infosys. But I think valuation comfort is certainly coming back. We're looking at FY24 most likely ending with a high single-digit earnings growth, but 25 and 26 projections are now going to 12, 13, 14% earnings growth. So I think, now would be a good time to get back into IT.
All right, good time to get back into IT. The stocks, in any case, have been, surging quite a bit. Numbers have not been that great, but I guess valuations are looking good. Thanks a lot for joining in. Appreciate your thoughts here, Gautam. Well,